This content is for educational and entertainment purposes only. It does not constitute investment advice, and no financial decisions should be based solely on this content. Always do your own research before making any trading decisions. One trade, one mistake, almost everything gone. I lost more than money on this trade. I lost my faith in an entire strategy, one I thought I could trust. The market had been whipping higher for days. Overextended, tired. I knew the pullback was coming, but I didn't have a single indicator to help me take this trade. So I decided to fall back on a strategy I used early in my trading career. The plan was simple. As soon as a red Heikin Ashi candle forms with no upper wick, take the trade. In real time, I watched this Heikin Ashi candle flip red, smooth, clean, no wick on top. It felt like a gift from the trading gods, the pullback I had been waiting for. My system said short here, and I entered a strong position, maybe too strong in hindsight, but what I didn't realize was that Heikin Ashi was smoothing over something I needed to see. It was masking the fight happening beneath the surface, on the traditional candles, chaos, hesitation, buyers stepping in, but Heikin Ashi smoothed all of that out, making it look like a waterfall, the perfect short opportunity. Minutes turned to hours, and my unrealized P&L went from green to red, deep red. Here's what hurt the most. Heikin Ashi made it look like I was still profitable, but that wasn't the case on the raw chart. Turns out the clean downtrend I thought I was riding wasn't nearly as strong as it looked. That day, I closed my trade for a huge loss. But more importantly, I closed my faith in Heikin Ashi as a trading strategy. You see, Heikin Ashi is like a pair of sunglasses. It makes trends look smooth and easy on the eyes, but when you take those glasses off, all you see is the hesitation and, most importantly, the truth. But I'm not the kind of trader who just accepts defeat and walks away. This loss lit a fire under me. A mission was born. Step 1, figure out exactly what went wrong. Why did Heikin Ashi make me think I was in a winning trade when I was actually bleeding losses? Step 2, fix it. Build a better Heikin Ashi indicator, one I can trust and that others can rely on, so no trader has to suffer the same fate that I did. This is the story of that mission. Let's start with step 1, uncover the truth. What really happened here? How did the trade that looked flawless on Heikin Ashi turn into one of the biggest losses of my career? To find out, we're going back to the exact moment that I pulled the trigger. Back to the chart, the candles, and the hidden signals that I didn't see. Because somewhere in that trade lies the answer. In its time, we found it. The asset had been trading at all-time highs and was in a roaring uptrend, overexhausted and due for a pullback. And the plan was that as soon as a Heikin Ashi candle that was red with no upper wick formed, it was on me to take a short position. And take the short position I did. After I took this short, the trade surprisingly went exceptionally well. Price continued to pull back. The exit plan was simple. Wait for a green Heikin Ashi candlestick and enter the trade at a better price. Sort of like on this Heikin Ashi candlestick here, which is clearly colored green and even has no lower wick. But this green Heikin Ashi candlestick is where a great trade turned into one of the worst losses in my trading career. I followed the trading plan exactly as prescribed, and as soon as this green Heikin Ashi candle formed, I exited my position on the green candlestick shown above for a horrible loss. Here's my short entry on the Heikin Ashi chart, and here's my short entry on the candlestick chart. Here's my exit on the candlestick chart, but here's my exit on the Heikin Ashi chart. We can clearly see that the exit on the Heikin Ashi chart was closed at a better price, but the exit on the traditional candlestick chart was closed for a loss. And if you're like me, you're probably wondering, how on earth could this happen? And truthfully, at first, nothing made sense. The Heikin Ashi chart still looked perfect, a clean downtrend, no wicks on top, everything I thought I needed to stay in the trade. But then I started comparing it to the raw price action, and that's when I saw it, a fight under the surface. On the traditional candles, there were wicks, hesitation, buyers quietly stepping back in. But Heikin Ashi had smoothed all of that out. The reason? As I painfully found out, it's how Heikin Ashi works. Each open isn't where the market actually opened. It's calculated from the midpoint of the previous bar. And the Heikin Ashi close price, that's not the true closing price either. It's an average of highs, lows, opens, and closes. Those beautiful, uninterrupted red bars looked clean, but they masked what was really happening underneath. And by the time the chart told me the trend was safe, the market had already reversed. This realization hit hard. Heikin Ashi wasn't broken. It was just never designed to show the raw truth. It was built to smooth chaos, to make trends look clean and easy on the eyes. But as you and I know, trading isn't clean. It's messy, and we need a tool that can handle this mess. That's when step 2 of the mission became clear. We have to build it ourselves. A version of Heikin Ashi that I could trust, and that might help others too. So I went to my developer and I told him everything: the trade, the loss, the flaw in the calculation, and I asked him to create a version that fixed those flaws, one that preserved the clarity on the chart but doesn't smooth over reality. And when he sent me the first prototype, it completely changed the way I saw Heikin Ashi. I loaded the chart, and for the first time, I saw the raw price action and Heikin Ashi working together, not fighting each other. The smoother trends were still there, but now the hidden volatility was exposed. It kind of felt like lifting the fog and finally seeing the fight between buyers and sellers clearly. What appears to be a smooth uptrend on Heikin Ashi looks completely different on Heikin IQ. With this indicator, we can clearly see the struggle between buyers and sellers, something that isn't always visible on a traditional Heikin Ashi chart. And I immediately noticed that this violent pullback was still shown as an uptrend on Heikin Ashi. And if I had taken this trade, I would have ran into the same problem I had before I made this video. But Heikin IQ didn't fall for the same mistake. This indicator gave what I interpreted as exhaustion and might have helped me avoid that painful trade. Through a mix of my developers' insights and my own hands-on testing, I began uncovering how this new indicator works, and more importantly, why it was a different take on traditional Heikin Ashi that gave me more clarity. At first, I wasn't sure how to read the signals, but the more I watched it play out on live charts, the patterns started to reveal themselves. I noticed that when the green line moves above the upper threshold and this green circle appears. In my experience, this often lines up with a pullback, and I personally interpret this as a short signal, and there's just no indication of a potential pullback on a traditional Heikin Ashi chart. And I noticed that when the lower red line moves below the lower threshold and this red circle appears, the market usually pulls back to the upside. It's much harder to spot this on a traditional Heikin Ashi chart. But there's a catch to making sense of these signals, and it lies in one word: context. Without understanding the prior trend, these readings can be dangerously misleading. I want to go over this with you. This green circle appears exactly as it did in the earlier example, but you'll notice that price uptrends after the green circle and doesn't reverse like it did in the example we looked at before. And this is because price was downtrending before the green circle signal was actually given. Now, take a look on the right side where we have another green circle, but price pulls back and reverses after this green circle appears. And this is because price was uptrending before the green circle appeared. Based on my observations, this exact same contextual logic can be applied on the short side when a red circle appears. After spending days testing the indicator, I still had one question burning in my mind. How did my developer take Heikin Ashi, a tool that didn't quite work for my needs, and rebuild it? So I called him. I told him to walk me through it. I asked, "This isn't just Heikin machine with tweaks, is it?" He laughed. Not even close. What you're looking at isn't a candle modification, it's an oscillator. Here's the thing, he continued. We took the Heikin Ashi formula apart and re-engineered it to measure momentum. Instead of smoothing price action into candles, we calculate the difference between the Heikin Ashi prices. That difference is plotted as an oscillator, above and below a baseline. The further it extends, the stronger the momentum, until it snaps back. It wasn't what I expected, but the more I thought about it, the more it made sense. Instead of trying to force Heikin Ashi, it could be in something that wasn't. We let it evolve into a tool that exposes momentum directly. As I kept using the indicator, one thing became clear. Spotting these momentum extremes gave me insight I didn't have before, but I couldn't sit at the charts all day waiting for them. So I asked my developer for one final feature: alerts, and he delivered. He built in the ability to set notifications whenever the oscillator crosses over a T level. It was the missing piece to solving the two-purpose mission I originally set out to complete. This wasn't just a tool anymore. It had become a part of how I analyzed the markets with Heikin Ashi. I'll wait to avoid the blind spots that cost me so much on that one trade, and hopefully a way for others never have to learn that lesson the hard way. Don't forget to like, comment, and subscribe with notifications on if you found this video helpful. For details on how to access Heikin IQ, link in the description below, and don't forget to follow us on TradingView and join the Trading IQ Discord server where we talk trading every day.